Hi guys, my name is Gil. Welcome to Crypto Time channel. Today, as part of our declassified series, I want to bring a new tip. So please consider subscribe and hit that bell to get the latest from our channel. So let's run the intro. So as I said, today's tip is something that we don't want to do in the market. Okay, so let's see how that will work in the chart. So let's jump in. So here we are, BTC 6 hours chart. You can use that in different time frames if you want, but the first thing you have to have is a setup which will give you buying and selling signals. Okay, so I'm using two EMAs, exponential moving average. So one is this white, let me zoom in. So one is this white line, which is our fast moving average. So it's our 8. So EMA 8. And another one, the red or pink here line, is our slow EMA, which is the 80. So I'm using two of them. Again, the first one, the white, is 8. And the next one, the red here, is 80. So those are two EMAs, so as our buying and selling signals. Okay, so in here, as the fast EMA is crossing above the red one, so the slow, so I would consider to buy at the close of this candle right here, okay, or at the opening of this one. So that's why I have the the yellow dotted line right here, so to show you our buying point. Okay, you can use that for long position or short position, depending if it's bullish or bearish, but long, short, swing trades, as well as position trade. So the idea is the same. So for this scenario, if we're gonna open a long position, I would open here, right here, and my stop loss would be right here. Okay, so below I could set the stop loss just below the previous low, or below the slowest moving average, which is in this case the 80. Okay, this red line. So that's why we have this red dotted line right here. So I want to show you what happens sometimes in the market. So let's keep playing and see. So now you're seeing two more big green candles. So some people do what some people do in the market is they see a very big movement in the market. So if you bought, or if you open your position, or if you bought some BTC right here, and then you have seen all these happening, so some people would move their stop loss to their opening position. So that's our tip, guys. Don't do that. Okay, don't move your stop loss to the point where you open your position. Okay, don't do that. So if you do that, if you remove that because you believe the market is very aggressively now, and then you want to take more profits, and then you just moved here. So the market knows that people do that eventually. So as you can see, the market is moving. I'm just moving our replay tool, and then boom, you see right here it would be stopped. Okay, you would be stopped right here. All right, so don't move your stop loss you know, to your opening position, to your entering point. So we would have our stop loss here, and then we would be safe. Okay, if you move that, you would be liquidated. All right, so let's see another example. Let's keep playing and see another example here. And I have yeah, is for the short position. Okay, so here I'm just gonna delete this line here, guys, so we'll make our life easier now. So now let's play a little bit more. Okay, yeah, so here we have another scenario, and now for a short position. Okay, so the market is turning bearish. So we see our white line crossing below the red line. Okay, that's our buying signal, but we gonna wait until we lose a previous bottom. Okay, so that's our buying signal, so we'll trigger right here. Okay, so that's our buying signal. So let's change that to yellow. Excuse me. So that's our buying signal right here. Okay, and our stop loss would be at the previous high in this case. Okay, so let's set at this level right here. So our stop loss, and then our buying position right here. Okay, once we lost, you know, the previous lows. All right, so let's keep playing and see what happens. So pay attention. Let's see, going down. So we are now looking at a short position, guys, so bear with me. So yeah, so here we see now a very aggressive movement in the market, and then some people, what they might do, and believe me, they do that, they move their stop loss to their entering point. Okay, because they believe the market is gonna go, in this case, is gonna go down more and more and more, so they can have more profits. So if we move that, just for the sake of this exercise, so let's pretend we move that because we believe the market is gonna go down forever, and let's say, okay, so we move. So at the next candle, we are stopped right here. Okay, we would be stopped, but let's pretend maybe we moved that a little bit up, or for some reason, but what I'm trying to say is, if you see, the market goes there many times. Okay, many times. Okay, so if we had kept our stop loss up there, we would be safe. Okay, so as you can see, moving your stop loss to your entering point is not a good idea. Okay, so we would be stopped in different candles, in different days actually. Okay, so it's not a good idea. So let's let's go back to the charts, and see another example that I have here for you guys. Yeah, those two. So it's the same thinking again. So let's zoom in. So for the long position, you can see here is our entering point. So this big candle, this big candle breaking up the previous high, so that would trigger our long position, and then our stop loss somewhere here. previous low, or at the low EMA. Okay, this low EMA. And then if you see our starting point is here, so the market is moving upwards. But if we believe the market is gonna go like forever upwards, very aggressively, and then we kind of move our stop loss to our entering point, and then the market will remember that, and then we will liquidate everyone who did that. So it's not a good idea to move your stop loss. Okay, it's very likely you will be out of the game. So in this case right here, okay, at this candle. And then as you can see, the market is moving upwards. So if you move your stop loss to this point, to your entering point, the market will take you out of the game and keep moving upwards. Okay, very good movement right here. All right, so don't do that. Another example, so you see the movement. Yeah, so another example again is for the bears. So here we have our entering point. So now the EMA, the white is crossing below the red, so that's our selling signal. But we have to lose a previous low, a previous high to do that. So the previous low actually, and then that happens right here. Okay, so that's our starting point. Our entering point for a short position would be this yellow line, and then let me change this one to red to make it easier to see our stop loss. So our stop loss would be previous highs in this case. So that region there would be fine. Okay. And then, as you can see, if you believe the market is going down forever, because you're seeing your moving average, or whatever you have there as your setup, and you believe now it's gonna go forever to the deep, and then you decide to move your stop loss to the point of your entering point position, so then you be liquidated right here, there, and then the market will keep moving, in this case moving down, because we are now in a bearish movement. Okay, in a bearish trend right here. So they take out of the game a lot of people here, and then goes down again. Okay, so don't move your stop loss. Okay guys, I think that's everything I want to show you on this video. Please again consider subscribe, hit that bell, give your thumbs up, follow us on Twitter, Instagram, Facebook, and see you on the next video.